Good morning. Thank you for tuning in to another pre-market pulse scan. Today is December the 20th, 2016, Tuesday. Just a few days until Christmas Eve, 4 days to be exact, and that's pretty exciting. Well, looking at the overnight market, looks like gold is getting crushed again. We're sitting right here at the session lows. We hit 1130.40, and now we are at 1130.90, down $11.80. Overnight high was 1141.70. Looking at silver, last trade is 1578.5, down 30 cents. Overnight high was 1611, and the low was 1574. Can't believe that silver is hitting the $15 handle, but it did. Looking at your US dollar, last trade 103.59, make that 103.60, up 5 ticks. The overnight high is 103.62 half, and the low is 102.97. So quite the swing in volatility in the US dollar. That's mad movement. The US dollar would move that much back in the day. It'd take a week to move that much. Now it's doing it with no problems at all, on an intraday basis. Quite fascinating. Looking at crude oil, $53.35, and that high was $53.45, low $52.85, or up 30 cents. The Russell is at 1379, up 570. Right there at the high, 1379 and 20 is the overnight high. 1372 half is the overnight low. NASDAQ last trade 2266 and a quarter, up. I'll make that 2266 half, up 6 and a half. It's right at near its high of 2266.75, and the low was 2260. Tight trading range there. The I'm sorry, that was the emini S&P 500 I gave you. I'm sorry. Emini NASDAQ 100. Last trade was 49.48 and 3/4, up 10. And the overnight high is 49.49 and 3/4. The low is 49.38 half. And last but not least, the Dow futures. Its last trade was 19,888, up 51. Overnight high is 19,890, and the overnight low is 19,833. So pretty tight trading ranges is to be expected, as this is Christmas week. So ain't nothing really happening, but they're taking this opportunity with light trading, nobody really paying attention, and they figure they come in here and sucker punch gold some more, and that's what's happening. So going forward, taking a look at how things are moving, it is to be expected that this trend will continue until it doesn't. So what are we looking for as far as possible any kind of rally alerts, crash alerts? Do we really have anything here? Looking at the long-term charts, and just a cursory glance at the charts would suggest that powerful trends are in force and that they are not in the process of changing anytime soon. You look at the weekly chart on the gold, as we showed you in last night's video. We meaning me, myself, and I. You'll see that we're setting up for the next leg down on gold, and it's about to crash through the floor of the previous support low. Momentum right now is gathering strength, and your trend lines are moving deeper into the Kumo cloud. This is bearish. There's nothing bullish on the charts whatsoever. So where's the bottom? We have no idea. We don't. We can look at where we've been to determine where we may be headed, but no one can say for sure with 100% certainty where the low is going to be, because we just don't know. We do not know how deep the trend is going to go and how long it's going to last. Trends can last almost indefinitely. There's no rule saying that a trend has to stop. Now, once you're into the trend, it's almost a habit to try to predict and determine when the trend is going to come to an end. When is it going to stop? And at the end of the day, you just don't know. You have no idea how far and wide a trend can go. So it's better, rather than try to predict where something is likely going to end, and just go with what the price action is telling you. You can go deeper into the price action and look at the bot checks and to see what the algos are doing. And then sometimes that will give you clues too. So with that said, looking from a weekly chart perspective, we do have a possible rally alert in place. However, it is of little importance, this particular indicator, because the pulse wave price is far removed from the market. Therefore, any type of a bounce that we do see will more than likely be short-lived and sold. How can we say this? Looking at the weekly, there is a locked-in negative bot check with a negative swing VIX. We have a 311 under the negative momentum column. Therefore, this market is not ready to go anywhere anytime soon as far as bullish. We have an 18 in the downtrend reading, and we have a 52 in the uptrend reading. So we're in a retracement still within an overall bull market on the weekly chart. It's still bullish. Can't call it bear market yet. All right. Now, as long as this retracement is still intact, which it is, we don't know how far it's going to pull back. It could pull all the way back 100%, which would give us the total destruction of the bull phase, and that would change the landscape to bearish at that point. So that's where we are. We're still in a corrective phase, not a bear one yet, just a corrective bull phase. It's still hanging on to its bull life, and we will see if the price action will turn at this point, or will we go full-blown bearish. Now, with that being said, it's not saying that the shorting has stopped. No, the system is still short the gold. All right, and I'm talking about the gold futures on your post-wave price trigger sheet. The system is still short. It's saying that the bears have it. The bears are in control of this market. Looking at some other alerts on the weekly tab, you should see, let's see, silver is the same story as the gold, same exact identical technical landscape. It's in a retracement off of a long-term bull market, and we are not ready to turn yet. However, silver is closer to a possible turn than the gold. Look at your post-wave price trigger versus where the market is, and you will see that we're close to a post-wave here. If you look at, let's see, do we have any other commodities on here, whatever. Okay, looking at the euro. Let's go down to the euro. The euro is locked in a downtrend on the weekly tab. We're still in the weekly tab here. Locked in on a downtrend with a negative swing VIX and negative bot checks. So this thing is locked in. Momentum is just locked. Yeah, you have a rally alert, but it's muted by the point that the the pulse wave price trigger is far removed from the market. So we're still locked in. So the system is still short on the euro, that means it's long the dollar, which means too, because you have a rally alert, it's saying, you know, tight stops here. Don't get too carried away because the market could turn. So remember that. That's what this warning is telling you. You may have to take profits quickly, so make sure you're using your stops. That's what the warning would dictate. All right. So tighten up on those stops. The next situation we have on here is GDX. GDX also retracement from the longer term bull market. Rally alert. Not too far removed from the market, but removed far enough to make it a moot point. So really the rally alerts when we have situations like this is just letting you know that the downtrend might be coming to an end, might be losing a little bit of momentum, and that you should take caution with your shorts. You probably don't want to add new shorts when you see those rally alerts. You probably just want to tighten up your stops on your current open shorts if you're shorting the futures outright. Looking at JNUG, JNUG right now is in a full-blown bear market. It is locked in with a negative swing VIX and locked in with negative bot checks and negative momentum. Has a rally alert, but again, price trigger is far removed from the market. So what this is telling you is that yes, the system is quote unquote still short this market, but you may want to tighten up on your stops and be prepared for any possible reversals and or corrections. All right. Excuse me. That's how you play that. Now, of course, we do not short stocks under $5 a share. We don't short $5 stocks. We just don't do that. You can short a $10 stock down to $5, but that's about it. I mean, you're not going to, come on. And why would you even want to short a $10 stock, really? You could do it, but you know your downside is limited. The most you can make is $10 if it goes to zero. But the upside is always more ridiculous as far as your exposure. So why would you even do that? So looking at JNUG right now, on the weekly, our entry price is far removed from the market. So once again, if you are short the actual shares, you're wanting to tighten up here and get ready to change course when the market is ready to do so. We talked about backing up the truck when and if JNUG dropped below $5 a share. Well, you know your downside is limited. If the stock's at $5 a share, the lowest it can go is zero. The most you can lose is $5. So if you bought 1,000 shares, the most you can lose is $5,000 if it goes to zero. Likelihood of JNUG going to zero and being delisted is very, very low. So therefore, if you have the stomach for it, you could technically back up the truck, and when the gold miners are ready to turn, you could be looking at making a fortune here. That is with any of the mining shares that are trading below $5. You buy them and sit on them and wait for them to turn. You're not trading those because, again, it's a $5 stock or it's trading below $5. What are you doing? So that's just one way of looking at it. You're not wrong for buy and hold in situations like that when you're talking about the mining sector. Now, I will say this though. When you're doing that kind of a strategy, your time horizon needs to be really wide. You can't say, I'm going to tie up $40,000 in these penny stocks and these mining shares and wait for the market to turn. because that could be quite some time. You could be dead before that happens. I'm not being funny, I'm just saying. So you need to do your homework when it comes to, these any particular companies you're putting money in like that. Because again, it's pennies. You don't want to put all your money, all your eggs in one basket. You would like to put some money there, money that you can walk away from, but you don't want to park all your assets like that. You want to be able to trade, because that's how you accumulate the wealth, not just by buying and holding and waiting for something to explode. That's not smart. With that said, let me also preface, because I know I have a lot of new listeners, and I have new people that are new to the world of trading and investing. You may even be new to stacking. I don't know. So I'm not going to assume that everyone is on the same level. And this is not to talk down to anyone or call anyone an idiot, but I have to idiot proof what I say now, because I do have people from time to time commenting and sending me notes. So when you hear me talk about anything that has to do with these markets and a pre-market PulseScan report or the end of day VULCAN report, please do not just run out and start buying and selling securities based on what you've heard me say. Do your own homework, do your own research, and please, by all means, use some common sense. I don't care how much you like me. I don't care how talented you think I may be. If I say, I'm gonna go and buy some J-Nug today, well, don't you just go out and buy it because I said it. You need to research. You need to do your own homework. You need to check your own finances and look at your own risk capital and things of that nature before you just jump in and do something because you heard someone else say they was going to do it. I don't care who it is. I don't care who the celebrity is, who the voice is. You need to do your own homework, do your own research. Okay? Now, if you're a subscriber to the premium post-wave price triggers, it's a different story. We have a system, we have a method, we have a strategy for doing things. So you don't need me to tell you to do anything because you have the price triggers in front of you telling you what to do. It's a different story. But also you need to know, those who are listening to me, that trading and investing is not without risk, especially when we're talking about trading forex or trading futures, where there's leverage of 50 to 1 up to in some cases, in instances, 500 to 1 leverage. Therefore, you need to be very cautious and knowledgeable about what you're doing before you do it. You don't just throw yourself into a deep ocean with piranhas and sharks and barracudas and other dangerous sea monsters, and you have no protection and you don't know what you're doing. All right, that's a good way to run into Jason Voorhees and Freddy Krueger and get your face ripped completely off your body, pulled back to the white meat. Don't do it. All right. Also, whenever I say about a market that may look good and want to do something in it, remember, we enter the market based on the price triggers only. We do not just go in and buy something outright. Price triggers is what we use. So we may or may not get filled in a particular play because our price triggers have not been satisfied. We enter the market at our price. If we do not get our price, we don't enter the market. So unlike the vast majority of people, that's not how we move. So those of you who are not premium post-wave price trigger members, subscribers, you have no idea what to do and how to do it. And you don't know what we're doing and how we do it. So you need to come on over to postwavetrading.com and learn what it is that we do and how we do it, so that you too can provide for you and your family. With that being said, light trading today, probably no trading at all this week. Just wanted to put that out there. Also, next week is an interesting week coming up, and I will be out of town a few days next week because I have my wife's birthday coming up next week and our wedding anniversary. Therefore, I will be out of pocket. So I may not be doing any videos. I will do them as I am able to. So with that said, take advantage of what you got now. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.